Do you want to grow your wealth? If so, you have to buy assets. But it can be hard to find the best assets to buy with so many options out there. First off, what is an asset? An asset is anything that is valuable. If you want to be more hands-off in your approach, you have a few options. Equities or stock. One of the most popular asset types is a stock. A stock is basically partial ownership of a company. When you buy a stock, you become a very small partial owner of that company. If that company becomes the next Amazon, the stock value goes up and you profit. However, if it becomes the next Blockbuster, you will lose your money. If you're thinking, what the hell is a Blockbuster? My point exactly. So how can you know which one to buy? What if I told you there was a way to spread out your risk and partially own multiple companies? You can do so with a mutual fund or an exchange traded fund, ETF. For example, SWPPX or VOO. These funds are pretty affordable and give you partial ownership of multiple companies. They trade like stocks and you can easily buy or sell them through a brokerage account. High yield junk bonds. When you buy a high yield bond, aka a junk bond, you're basically lending money to a business with a low credit score. There's a chance you won't get your money back, but by taking that risk, you could earn more money. Like stocks, there are junk bond ETFs that you can buy to spread out your risk. Structured notes. Structured notes are like loans to the bank. These notes have different flavors and special features. You can buy a note that basically says if the stock market goes up 15%, you get to keep 10%. But if it drops, you don't lose a dime. If you want to be more hands-on in your investments, meaning more learning and more doing, you can look into the following options. Real estate. Depending on how involved you want to be, you have different choices. If you want to be more passive, you can invest in real estate investment trusts, REITs, REIT mutual funds, or REIT ETFs. REITs are companies that own and run properties like hotels, apartments, or malls. They collect rent and pay you a split. Like stocks, you can easily buy REITs through a brokerage account. If you want to be more hands-on, you can look into the following. 1. Investing directly in commercial real estate, for example, retail stores, offices, hotels, or warehouses. 2. Buying a house and renting it out for income. 3. Buying a property, fixing it, and selling it for a higher price. You can also look into investing in first trust deeds, apartments, senior housing, and farmland. Collectibles. If you have specialized knowledge in the type of collectibles, for example, Pokemon cards, wine, or art, you can definitely invest in it. Commodities. Commodities include things like gold, cotton, coffee, oil, and wheat. When you invest in commodities, you're basically betting that they will go up in price. Sometimes commodities can be used to fight inflation or diversify your portfolio. You can invest in commodities in the following ways. 1. Commodity ETFs. 2. Stocks or ETFs of commodity producers. 3. Buying the physical commodity itself. 4. Future contracts. If you're enjoying this video so far and finding it helpful, be sure to hit that like and subscribe button for more videos like this. Currencies. Have you ever thought about trading money for money? This is called currency trading. You buy the currency of one country and sell the currency of another. You make or lose money when the exchange rates change. There's a good amount of guesswork involved, and you need to understand how trends happening around the world affect currency rates. Owning a business. Lastly, you can buy an existing business or make a new one. The business can be online, for example, content creation, or physical, for example, Starbucks, and you can sell a product or a service. Every asset in here can get high returns, so everybody wants to be here. But the key word here is can. Growth is not guaranteed, but risk is. You can lose everything you put in here overnight if you don't have protections in place. You wouldn't go skydiving without a parachute, would you? So don't invest without putting some protections in place. You need to diversify between different types of investments. The best investors in the world all know one thing. They will be wrong some of the time. So they diversify to make money in the long term even if they lose money in the short term. The investing world runs in cycles. Just like the 4 seasons of the year, different investments will do well in different times. This next video will go over 11 different safe investments that you can buy to protect yourself from losing all of your money.